Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new week. I won't say new trading week because as we know, Bitcoin is 24/7. But yeah, welcome to the new week. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those particularly healthy looking Bitcoin charts. So yeah, looking very good here. We did spend a period of time bouncing around this level, this sort of $64,000 to $60,000 level, a few forays above and below, but yeah, we came down and touched the bottom literally to the dot, and then made a nice move to the upside and then broke above, which is where we find ourselves now, which is kind of what we were expecting. We kind of know everything's macro bullish. Obviously the market can break either way and it's all about probabilities, but we were definitely assigning a higher probability that we were going to break to the upside rather than the downside. But yeah, where do we go from here? This is a nice aggressive move. Yeah, I mean, I think I've alluded to the fact that I suspect we can potentially just consolidate and trade within the top side of this wider range that we're in, which would give us basically around $64,000 to, well, around $68,000. I mean, if we rounded it up, but yeah, I mean, $67,000 the previous all-time high. Maybe we get some breaks above. That's kind of why I say 68,000. But I do think that we will potentially just consolidate in this area, and then ultimately we don't necessarily have to break to the upside onwards and upwards. We may then drop back down into the $60,000 to $64,000 level, but ultimately it's just a game of levels, and we'll just have to see where we break and confirm above or below on higher time frame candles, and then yeah, to see where we go. But obviously if we do break above here, we could start to see some serious FOMO. I mean, like a few $1,000 moves in Bitcoin at this price point of around 66,000 are not massive percentage gains. So we could easily see pumps up to 70k, even beyond. At which point we then would kind of have to entertain the idea that this $67,000 level could then start to operate as support. But I mean, it's only been tested once. We've only got there once. This is kind of why I'm erring on the side of maybe we get up to here, we start to consolidate, trade sideways, actually build this level as a sort of like a real resistance area. So when we ultimately ideally break above, we then have a real support level rather than literally just a one touch up here. So yeah, we shall have to see how it goes. Obviously, I think the markets, the world, people are coming around to the fact that central banks can't really do anything. I mean, they are, whilst they're tapering, so they're still basically easing. They're tapering. Obviously, everyone knows that. They're just doing less of it. And then, I mean, raising interest rates, I mean, is literally just it's just a no-go. There's so much leverage in the market. There's so many hedge funds doing wild stuff, like the same stuff that Archegos or whatever did that basically blew them up. There's like the basis trade, there's a risk parity trade, there's leverage short volatility trades, there's all sorts of picking up pennies in front of the steamroller trades that these hedge funds get up to, because they're doing it with OPM, aren't they, with other people's money. So leverage up, take as much risk, pay yourself out of those gains, and then when everything blows up, you just retire, don't you? It's like they win. It's like heads they win, tails you lose. So yeah, I mean, that's basically the dynamics of the market. I mean, humans are greedy. It's human psychology. I mean, humans just do what they do, and if they're allowed to operate that way within that system, they're the guys that are managing and hiding the risk and fully appreciate, well, to a certain extent, fully appreciate the risk. I mean, that obviously they probably don't fully understand the risk, but I think they have a good grasp of what they're doing, and it is the investors, the high net worth individuals, the people's money they're trading with, that they're then using as collateral to borrow against the leverage up trades, that they're the people that really understand. They just see, oh, I'm getting and getting 20 or 30 or 40% gains a year. This is great until that 1 year they end up with a 100% loss. And then do you know how many percent it takes to get from 100% loss back to where you were? Oh, wait, that would be an infinite, but that would be an infinite percent. You can't do it basically. Anyway, I have to digress there. But yeah, anyway, so basically what I'm saying is the Fed can't raise rates. That's it. That was what the whole of that rant was about. So anyway, let's look at some other pairs. This is literally what we were expecting to see in this pairing. As soon as Bitcoin made the move, it was going to move down, which it has done, hitting our first support level. So Bitcoin is there or thereabouts at the level of 67,000, there or thereabouts, give or take. So if it does start to at least pull back, consolidate here, then we could expect it to get support at this nice level, and then ultimately we can just kind of continue trading within this range, building the head of steam before ultimately breaking onwards and upwards. Obviously, if Bitcoin does break above its all-time high and starts to really accelerate, this will just come down lower. I mean, it's literally as how this market trades. Obviously, the USD pairing, if you want to look at it clearly, clearly moving up with obviously the dollar value of Bitcoin moving up, running sort of 409 here. But I mean, we all know where Ethereum's going. We all know how great Ethereum is. I don't need to talk about it really. That is that 47 handle back again, 4700 handle on the S&P. Yeah, just crack up, boom, onwards and upward. Ludwig von Mises, eat your heart out. DXY just slightly easing off here, not really too much to write home about. Like I said, if you are under the impression that central banks can't do anything, because they can't, then you kind of just look at currencies. They're all just shifting deck chairs on the Titanic. Basically, they are all going one way ultimately. They all have gone one way ultimately, all ones in the past, and that is literally it. So as in the shifting of the deck chairs is like just the shifting of their relative values between each other. And that's about it. Yeah, also, if we do get like one of those crazy sorts of markets, I think this did happen in the run up to the crash, the 1929 crash. Obviously, all world capital was flooding into the US markets because they were performing the best, which obviously lended support to the dollar, because obviously you have to buy the dollar to then buy dollar assets. So there is obviously that dynamic that is going to push the dollar higher, whilst just asset prices in dollar values, dollar assets just go up, because that's what the dollars are being bought for, to buy their assets. They're not being bought to be just parked in dollars, just as a safety trade. So the dollar is not rallying on safety, on basically safety concerns. The 10-year as well, having a little bit of a pullback as well into its resistance. If it wants to load up, you pull back into its resistance, old support, new resistance. I mean, maybe it does get back above here. Maybe this is sort of a swing fairly below, but I mean, it is hard to gauge, because with this is just a snapshot as well. Remember, this is only the 10-year. This is not the long end of the 30-year. This is not the short end, the 2-year end of the curve. This is the midpoint of the curve. But like I said, I mean, at any given day, there will be different dynamics pushing these markets. So it could just be a risk on today, pushing bond yields higher, whereas obviously on other days, the bond yield can rally, but without it being risk on, it could rally on like inflation concerns. But I mean, the only way for this Ponzi to resolve itself is to inflate the debt away. That is the only option. So inflation is the only option, and that is always what has been. Prices of everything have always gone up. The price of all currencies relative to real things have always gone down. It is the way of the world. It is that simple. To try to pretend anything else is the case is asinine. It is an asinine thing to do. Nascoin, look, this is Nascoin cash market, not the futures market anyway, so this isn't actually moving at the moment because the cash markets are open. Gold, yeah, I mean, it's just the most, but this literally looks like the Russell before it recently had its breakout. I mean, it doesn't really do much, but the Russell has recently had a breakout. It has built this Wyckoff accumulation cause. This is a massive cause, so we can actually expect a massive effect and a big pump up in this. But yeah, like I'm saying, it kind of looks like the Nasdaq. We did this for a long time. Gold, if we look at gold, not the Nasdaq, that's the Russell. The gold has sort of been doing this, if we zoom out, for a long time. And yeah, ultimately, if it does move up and break up, then yeah, it will go nuts. It will go nuts. But we are far from that, and it is not certain. And there are just faster horses for us to get on the back of. But don't forget, like, generally, whatever can realistically happen to the financial system, it is more likely that cryptocurrencies will be the beneficiary over precious metals, over gold. I mean, gold will be the main beneficiary if we have literally Mad Max Armageddon. Yes, gold, but we don't even really want to think about, because I have more value in that I'll have more value than gold in that scenario is weapons and force and things like that, because then you don't need gold to then trade the stuff. You just go and either take the stuff off other people or take the gold off other people to then go and buy the stuff. So yeah, lead will be more valuable than gold in that scenario. Obviously not literally. I mean bullets. But yeah, so there we go. So let's look at these stochastics. We know they are going to be looking all right. 4 hour, yeah, nice move up. Did obviously get us up and break us above. I mean, 10 hour moving up very nicely. 12 hour going to be moving up very nicely. Got lots of room to run as well. Daily moving up still very nicely. Lots of room to run. 2 day has now turned back up, which is good. 3 day has turned back up. 5 days turning back up. Weekly still looking good. Bi-week and a month looking good. So we have literally got a full house. We haven't had a full house in a while. A full house of all the time frames we look at. So yeah, very, very bullish read, but then we do know that this market is going up. It's a case of we know the destination, it's just the direction, the route we take. We are going to run into obviously an all-time high where people are going to sell. Potentially we get a wake up, a squeeze. We are certainly squeezing shorts here. We are certainly running on squeezing shorts, because people always like to short these markets. People always like to short all markets, because if you usually markets go up, if you short markets, you're contrarian. If you're contrarian and you're right, then you become like a maverick, famous person. You get some of that street cred. Don't forget, humans are fallible creatures. You get the likes of Michael Burry that we all know about, because one of his shorts paid off. Congratulations. We all know about George Soros, because yeah, one of his shorts paid off. And yeah, I mean, that's just how it is. They're just attention seekers. There are a lot more people that you never hear about that make more money just by basically just going along with the market. So yeah, there you go. What an absolute random rant we had this morning. So yeah, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.